Unlikely right now. I think in the beginning of the year there was that concern because we had forecasts for 2 successive quarters of earnings declines, that the definition of an earnings recession. And then also what you find is that 75% of economic recessions since World War II were preceded by earnings recessions. But now that we got better than expected results in the first quarter and the second quarter, third quarter is expected to be off by 3.3%, but then we're going to be up 3.8 in the fourth quarter, so taking the earnings recession off the table.
So you've got, in terms of guidance cuts and the risks that companies are citing, tariffs, the US dollar. What else are you hearing out there? And where do those two rank in terms of how painful they're going to be?
Well, I think that what we're finding is that people just don't know for sure. That's why we're seeing 10 of 11 sectors that are expecting earnings shortfalls compared with their June 30th estimates, and all 11 sectors are now posting earnings expectations that are lower than what was foreseen in June for the fourth quarter. So people are really being conservative by sort of ratcheting down their expectations, but I don't think they're going far enough to say that we are headed for an earnings recession.
Well, I want to switch gears and ask you the question that everyone wants your take on. And I don't know, forgive me, I don't know if you've released your take on this yet prior to now. Michael Burry's talking about there being an indexing bubble and a passive investing mania, which strikes me as odd because the whole idea of indexing and passive investing is humility. And people saying, I can't beat the market. It's almost the opposite of a mania. People just being realistic. And then the money moves from almost the same portfolio, from a closet indexer who's charging 80 basis points to Vanguard or iShares who are doing it essentially for free. But it's the same holdings. How could this be a bubble? Why would this be a mania that we need to worry about? What are your thoughts on this idea?
I guess my thought is that maybe what's happening is you are having so many investors pile into the mega cap stocks, and a very smaller component of those stocks are what's driving the overall index, to the point where when we do eventually end up falling into a meaningful bear market, that it's being very top heavy and dragged down. Similar to what we saw in 2000, while the large caps were down 10%, small and mid caps were actually up for that year. 2001, large and mids were down, but small caps were still in positive territory.
So is it a